one of the oldest departments of commerce in the country. This year it is celebrating 100 centenary year. Department of Commerce, Calcutta University. Because he happened to be, Professor Saha happened to be our Board of Studies member, I could gather some information about him. Good morning, Professor Siddhartha Saha ji.
Yes, good morning, Professor Jyoti Kumar, and also good morning, Professor Singh.
Yeah, good morning, sir.
Namaste,
Good morning.
namaste, sir. Namaste.
Again, there is, excuse me, because I'm not able to show my face video, so I'm extremely sorry for that. Okay, otherwise everything I think will be all right.
Yes, sir.
And let me allow to change the name. This is my son name, and my son name is Siddhartha Sankar Saha. So immediately I change my name and then do it. Okay, thank you.
Thank you, sir. Thank you so much.
Okay, already changed the name, right? Thank you very much.
Yes, sir. Yes, sir.
Okay.
You are on time, sir. Thank you very much. You are on time, and I just give a brief introduction about you. And we have nearly 40 participants in this group, and all the participants, they are the faculty of commerce or economics or management. And they are from different parts of the country because this is online system going on. Participants are joining from different parts of the country. But all the participants belong to either commerce discipline or management or economics discipline. And this is a refresher course, and we started this program from June 1st, and we are going to close it. It is a 2-week program, and we are going to close it on June 14th. So I feel I am deeply honored to introduce a popular, a well-known academic in commerce, that is Professor Siddhartha Sankar Saha. And of course, you can get his details from the screen, and he's from the oldest university in the country, that is Calcutta University. And we all know Calcutta University was started in 1950. It is 1857. So Calcutta University, Bombay University, and Madras University, these three were the oldest universities in the country. So what is its age now? It is 165-year-old university. And Professor Saha belonged to the department which is going to celebrate 100 years of its existence in the country. So hearty congratulations, sir, to reach this stage. And we, universities like Mizoram University, we have to go a long way to create a landmark like yours. And
thank you very much.
He is head of the department at present, and formerly he is the Dean, Faculty Council in Postgraduate Studies in Commerce, and he is the Director, University of Calcutta, Calcutta Stock Exchange in Financial Markets, and he is also Director of IQAC. So I could imagine your life, sir, being the Director of such a large university, Director of IQAC. Still, I really appreciate you for your passion for teaching and your passion for writing. He authored a number of research papers and many textbooks, and some of his textbooks very popular among the students of commerce and management are Indian Financial System. Second edition is available now. It is from McGraw-Hill, and Merchant Banking and Financial Services by Scholars Press, Germany, Capital Markets and Securities Laws. It is from Taxman Publications. Second edition is available now. He provided supervision for more than 10 PhD scholars and more than 15 MPhil scholars so far, and many scholars are still working with him. And with this brief introduction, I request Professor Saha to deliver his lecture on IPOs Market and recent LIC IPO.
Very good morning to our senior professor, Professor Jyoti Kumar, and also senior professor, Professor Singh, and all the faculty members in the Department of Commerce and Management in the Mizoram University. I convey my best wishes to all the participants across the country. And I'm so glad to be part of that. And also I convey my gratitude to Mizoram University, especially Professor Jyoti Kumar and also Professor Singh, who actually invited me. They are our good friends in our fraternity. They given me the opportunity to perform different activities and to be associated with different activities in this great university, Mizoram University. So without wasting time, so here I've chosen a topic, very important topic and very vibrant topic in the LIC IPOs. But basically my planning is to focus on, first of all, the fundamental aspect of IPOs market and different issues, and then come to the LIC IPOs, the current situation. As you know, LIC IPOs basically listed with the stock exchange NSC, that is 17th 17th this month, I mean last month 17th, and then we have the information from 17th May to 6th June, what is happening in the stock market, because investors had on money basically invested in IPOs, LIC IPOs. So but time is very limiting factor, 90 minutes. Don't hesitate to speak to me, to Professor Saha, because I have not come here to deliver. I've come here to share my views, and the moment you find any difficulties, the moment you find to share Professor Jyoti Kumar and Professor Singh and other members given the opportunity. So I'd like to interact with you, virtually, but unfortunately, due to some technical reason, I'm not able to show my face. But at the same time, I tell you that is I'm ready to, communicate or interact with you any point of time if you have any issue regarding the discussion. So I have chosen the topic here: investor awareness. We are all the investors, because if you have the surplus money, so as you know, that is you're supposed to invest money in different scheme of investment, small savings to maybe our high risk type of savings like capital market, primary market, capital market, debt market, or derivative market and IPO market. And then slowly, second part of my discussion, where I'll try to focus on the LIC IPOs based on the red herring prospectus, and finally prospectus, and what is the price band, what is the cut-off price, what is the listing price, listed price, how is the cut. Let me begin one by one. So as you know, friend, very well, we are the finance people, so we know the entire financial system or financial market here. I've given a holistic view here. So if we talk about the financial market, we must talk about the regulatory bodies, including SEBI, stock exchanges, RBI, talk about primary market, talk about foreign exchange market, and also we talk about the securities market. And if we talk about the securities market, then we must talk about the equity market. Since we are talking about here the primary capital market, more specifically the IPO market, so you know the public issues having the two types: one IPO, the initial public offer, and then further public offer, and many issues are there: right issues, private placement, bonus issues. So also we have the secondary market. But as you know, my dear friend, all of you, as you know, there is, if we talk about the IPO, this term can be applicable to those companies which are not listed, which are purely unlisted, like LICI. LICI basically was the unlisted company. And if you talk about what the promoters of the LICI, you must say the promoter of the LICI is His Excellency, the Honorable President of India. As you know, the entire number of shares basically owned by the government of India, rather the President of India. So here we are talking about the IPO, but at the same time, you could take example TCS, Tata Consultancy Services. So this company basically called, the same time you see that is your unlisted company, in their life. Only one time they can come to market to raise money, corporate finance, with the help of IPO. But many times they can come after listing the security in the stock exchange in the form of FPO or other form, right issue, private placement, bonus issue. But there is a question here. Okay, what type of IPO the LIC basically adopted to raise finance? It is not fresh issue. It is basically offered for sale. But you understand the TCS, the nature of company, shares owned by the government of India, but TCS and others, that is, that are not the same type of company. So here, am I audible, everybody? Am I audible?
Yes, sir. Yes, sir. You are audible, sir.
Okay. I request the participant to active participation. If you have anything to say, then please you interact with me. I'll be happy for that. Thank you very much.
Sir, our participants are not having access to audio, so they will be putting their questions in the chat box.
Chat box. All right.
Yes.
I'll follow the chat box. No problem.
Okay, sir.
I'll follow the chat box. And here I find that is our many people say yes, sir, yes, sir. Many things given. I'll try to find out the chat box. Thank you, Professor Singh, for doing it, and then I do accordingly.
Okay, thank you, sir.
Thank you. And now coming to the next part here. As you know, whatever we talk about here and whatever I say regarding there is IPO market always will be guided by the SEBI ICDR regulation 2009 and amendment regulation 2022. So that is called the issue of capital and disclosure requirements. Now, if we talk about the IPOs market, what the investor? We know there are basically three categories of investor. One is the RII, you people sitting here. If you have the corpus capacity, corpus amount of investment that is up to maximum 2 lakhs rupees at a time, there is you and me, everybody will be called, that is retail individual investor. But if you have more than the corpus amount capacity, that is RII, I mean more than 2 lakhs rupees, then you will be called, there is a non-institutional investor. More than 2 lakhs, no limit here. Limit is there, that is in case of issue of allotment of share. But what is the meaning of QIB, or what are the meaning of QIBs? Qualified institutional buyers. Who are they? They are basically institutional investors like mutual funds, like financial institution, domestic, foreign financial institution, that is FII, maybe your banking organization, maybe insurance companies, many. But any kind of institutional investor, they are called the QIB. In nutshell, there are two types of investor. One is less risk taker, another high risk taker. QIBs are the high risk taker, while there is NIIs or RIIs, the less risk taker types of investor. Now, if we talk about different types of issues in the primary market, if we talk about IPO, as I told you, I've given one exhibit, you understand the public issues, right issues, private placement, bonus issues. So public issues talk about, it may be IPO, it may be FPO, and also IPO also may be press issue offered for sale, and FPO also press issue offered for sale. So if you talk about LICI basically unlisted company, not today, earlier, 17th May, unlisted company. Since it was an unlisted company, of securities about 4% of total stake, ultimately in the form of offer for sale. So what is offer for sale? Offer for sale like that, those securities held by promoters, they are ready to sell before the market people, before RII, before NII, before QIBs, before employees and others. So therefore, fresh issue of securities like that, here the promoter of the company is not issuing the securities. Fresh issue means when the company decided to issue security, both are not same. So for example, if we talk about the company, LICI is the company, but promoter is the government of India. If we talk about TCS is the company, but TCS promoter Tata Sons Limited. So that way I try to clarify before you, that is what is the meaning of the press issue and what is the meaning of offer for sale. I skip all those due to time constraints. Market, as you know, my dear intermediaries, who basically make a liaison between our market and also corporate and also investor, and also they play their role in the market. So if we talk about the intermediaries, the merchant bankers or investment bankers, example, the SBI Capital Market Limited, maybe that is Morgan, the Merrill Lynch, maybe that is VCK Capital Market Limited, ICICI Securities. So many Indian and also USA based or foreign based investment banker, merchant bankers, they basically play their core role. In the secondary market, not in the stock market, but in the primary. Basically play the role, primary, secondary, both. Many we have syndicate members, underwriters, maybe banker to an issue, registrar, portfolio managers, depositories, NSDL, CDSL, depository participants, about 1,500 depository participants, stockbroker, about 2,000 stockbrokers in India, sub-brokers many, R&T agent, they make a liaison between the company and investor, custodians are there, CRA, crediting agencies, 6 to 7 crediting agencies, Krisi, Likra, KR, etc., and others, venture capitalists, debenture trustees, investment advisor. If we talk about the capital issue management, how the issue management process, is nicely managed, how the capital issue, capital is raised with the help of the merchant bankers' expertise as BRLM, book runner, lead managers. So basically, the merchant bankers play here fee-based service. So now many fee-based services are there. So one of them here we talk about, that is issue management and merchant banking activities. We have also fund-based services, as you know. Those are teaching the subject in UG or PG level, you know very well, the fee-based and fund-based services. So what is the meaning of merchant banker? As I already talked about, I just point out here that the service-oriented industry, specializing in investment decision-making, assisting in making corporate strategies, procuring equity and debt funds for corporate sectors, establishing favorable economic environment, and performing as lead managers. Why I'm saying that? Because I come to the LIC IPOs part, then you see the more than 8 to 10 merchant bankers were appointed to manage the IPOs in Indian market. So that's why merchant bankers' role as BRLM, immense role. So let us check the chat box. Having good morning, everyone. Okay, thank you. And so fine. Okay, nothing. Now, so here if we look at this exhibit, you see the merchant bankers play the many role, but most important role is capital issue management activities. Merchant bankers can play the corporate counseling role, credit syndication role, project counseling, underwriting, portfolio management, many. But basically, the merchant bankers play their role, that is a private financial market, that is IPO market or FPO markets, as book running lead manager. Now, as you know, earlier we have 4 categories of merchant banker, but as per SEBI regulation, at present we have only category 1 merchant bankers. They play their role in the primary capital market as BRLM. Now there is a question. Suppose if we talk about the LIC IPO, how LIC IPO, since our topic is investor awareness, so that we have to understand how that is LIC's IPOs managed by many merchant bankers. Your hard-earned money, how that is they got and they managed, they issued share to you, and they decided the price. As you know, the cutoff price of LIC was 949, and price band was, perhaps you are aware of that, 902 to 949. 902 rupees was called the floor price, and 949 was the cutoff price. Band. So I come to you immediately for that to discuss, to say something about that, and then how the cutoff price 949 decided, how the listed price decided in the market. So many issues will come out slowly. We have class here that is 90 minutes, then it's till 11:30. I think I'll be able to cover some important aspect. But friend, if you look at the 25 steps, what I've tried to point out here, so that these 25 steps are bankers. So I'd like to give you the broad view. And then now segmental part to show better way. If we talk about LIC are appointed the SEBI register members, and also that is, bankers, etc. And also second step is that the merchant banker are supposed to, BRLM supposed to submit the due diligence certificate. So for example, we are the teachers, all participants we are teachers here. We always have a moral duty and also give the declaration, code of conduct, according to code of conduct declaration to the our university authority or college authority, they will perform well according to our code of conduct. So this is nothing but the due diligence. So since the by the company, so it entirely will depend upon the book runner lead manager performance. But they are the kingmaker, they are the intermediaries. They can help in one side the company and they can help other side, that is our investor. So therefore their role, immense role. So they should provide the due diligence to the SEBI. They will be accountable to SEBI because they are appointed by the company, but they are registered. They got the registration from the Securities and Exchange Board of India. So coming to third step, the BRLM is supposed to file 3 important documents step by step. As you know, the first document is I was going through a couple of days back. That is the draft red herring prospectus, and prospectus, which are very much available in SEBI. If you have an interest on this topic, you can visit the SEBI site and you can download 400 pages DRHP, RHP, and prospectus. So what is that actually? That is basically that is your prospectus. What is the meaning of prospectus? The financial, non-financial, many issues, many information are supposed to be communicated with regard to your IPOs related information and business information. Coming to step number 4, the Securities Exchange can issue in principle approval. As you know, the primary market that means if you want to buy that fixed deposit, you cannot sell in the stock market, the secondary market. But if you want to buy equity share, the mandatorily securities must get listed to the stock exchange, either NSE or BSE, and you have an opportunity to sell your securities, or you can buy more number of securities. And this is called the platform where the liquidity is there. So many people, buyer and seller, they can come together in the stock market after primary market. So therefore, the company should have in principle approval, either NSE or BSE or both, NSE, BSE, both. For what? For the purpose of listing of those securities which is coming out in the primary market. Say for example, 1 lakh share issued by LICI, say for example, and then ultimately securities must be sold in the primary market, and ultimately securities can be listed, already listed 17 May, that is on NSE and BSE both. Coming to step number 5, the SEBI's observation on DRHP. SEBI must give the observation whether it is correct or wrong. If it is correct, so then it will be converted into RHP, draft red herring prospectus, to red herring prospectus. And then if we come to the next step, the applicant or bidders submits their ASBA form to designated intermediary. What is the ASBA? Application supported by blocked amount. As you know, my dear friend, I'm sorry, next step, not this one, next step is BRLM, step number 6. BRLM rely on the SEBI observation files. SEBI observation files. Just a minute. Just a minute. Okay, SEBI observation files. We are reply to SEBI observation. As I told you, and it is required to modify. It can be modified. After that, bidding dates can be determined and price band. Say for example, am I audible? Am I audible?
Yes, sir. Yes, sir.
Okay,
Yes, sir.
okay. Thank you. So now if we talk about the bidding dates, as you know, friend, that every company can decide the bidding dates according to SEBI. What is the bidding date? The bidding dates, maybe that is 3 months, 3 days minimum, maximum 7 days, most maximum 10 days, during which you people, RII, NII or QIBs will be able to submit your quotation, submit your bids. How many number of share you would not buy, how, at what price? Suppose you have decided to buy 10 lots, one lot comprising, that is 20 shares. Therefore, you want to buy, say for example, 10 lots or 15 lots or 5 lots. So at what price you would like to buy? You have to quote, you have to submit your bid. So therefore, you have to know the price band. What is price band? Immediately come to you with numerical to understand better way. The price band comprising the two prices. One is called lower price, floor, and another is called ceiling price or cap. So for example, here in LIC, the lower price was, the floor price was 902 rupees, 902 rupees. And it was decided by the merchant banker based on qualitative and quantitative parameters. But what was the cap price? The ceiling price, higher price, upper price, 949. Many terms I'm using interchangeably. The rule is that according to SEBI, your cap price either will be equal to or less than the 120% of lower price. So for example, lower price is 902. And if you apply 120%, suppose you calculate here, suppose 90, so for example, just a minute. So for example, $902 and into 120%, it will be more than, that is 949. It will be more than suppose 902 into 120%. That comes to, that is 1,000 something. But actually cutoff price was, that is 949. So what I told you, formula according to SEBI, higher price or cutoff price always will be equal to or less than lower price. Lower price of LIC was 902 rupees and higher price was 949. So it is permissible. Now there is a concept of anchor investor. Who are they? They will be given the special attention for opening the book. So anchor investor are nothing but they are the QIBs, the special categories of QIBs, those having the corpus amount capacity, investment capacity, minimum 10 crores rupees. Who are they? They may be mutual fund, they may be banking sector, they may be pension fund, they may be financial institution, like that. So if any particular type of QIBs having corpus fund capacity, investment capacity, minimum 10 crores rupees, so therefore they will be called QIBs, but anchor QIBs, anchor ANCHOR, anchor QIBs, and for them separate terminal can be opened and they can submit their bid according to that way. Unlike there is other investor like other than anchor QIB and also NII and also RII. Now then, issue opens means the bidding period, as I told you, minimum 3 days, maximum 7 days, most maximum 10 days. So for example, today 7, if issue opens, if your bidding period is 3 days, in that case 7, 8, 9. So 9th will be your bidding closing. But if you say no, company decided according to SEBI regulation in consultation with the SEBI 7 days, you count accordingly. So during bidding period only, the prospective investor supposed to submit their bid. Now next step is that applicant or bidder submit their ASBA form. At present, that no investor, every type of investor basically, they are supposed to submit their banking information, because you are not supposed to pay the money. Those who are teaching accounting, application money, allotment money, first call, second call, this concept more or less abolished. Though this process is there, very less number of companies they prefer this type of methodology. Most of the companies they follow the ASBA method. What is ASBA method? Application supported by blocked amount. That means prospective investors supposed to submit their bid. That time they provide their bank related information, every information, and then they make available their sufficient to the company until unless securities can be issued. Ultimately, the account will be blocked. That is called the blocked amount. So not giving money, but you are giving your banking information. and how much amount available in your bank account, you're saying, you're communicating, and you are giving the assurance to the company. Demat account will be credited, securities will be credited to Demat account, and money will be debited from their bank account, and money can be transferred from your bank account to company bank account. Company bank account name is escrow account. Escrow, ESCROW, escrow account. So therefore, what I'm saying, your SB account can be debited, and company's bank account will be credited at the time of issue of securities. And company's bank account is called, that is escrow account, which is normally open account. That account cannot be used for this purpose. And at the same time, the securities can come from, securities can be allotted by the company to your Demat account, dematerialized account, isn't it? Any question, if you have, please you write here. If you have any specific point, my participants, please. Now then, coming to the 11, that is your step number. The designated intermediary, mainly syndicate members and others, they upload the bid on stock exchange bidding platform. Issue closes 3 days. So 9th May, issue normally supposed to be closed, and then modification of details of bid if required. Then register receives the updated and rectified electronic bids, because register of companies, they basically maintain the database. And then SCSB, the self-certified syndicate banks, where you have opened your account, bank account, to keep your sufficient money to participate in the bidding process. So SCSBs can block fund in the account of the bidder. When you are the bidder, and SCSB, self-certified syndicate bank, provide the final certificate to the registrar, and registered reconcile the data coming from different intermediaries, and then finalize. And the basis of allotment can be approved. As you know, the pro rata allotment basis, SEBI guidelines suggest that the two types of allotment process. Here, one method is that called QIB route. Another method is that profitability route. Under profitability route, the ratio is that 35% is to 15% is to 50%. 35% of total securities can be reserved for, minimum 35% for RII, retail individual investor. 15% of total securities can be reserved for NII, and maximum 50% can be reserved for QIB. So say for example, suppose LIC issues 1 lakh share, 35% share can be issued for the RII, 15%, 15,000 share can be issued, can be reserved for NII and non-institutional, and 50,000 share can be reserved for QIB. Likewise, we have another method of allotment, that is 10% is to 15% is to 75%. Now that is the point. If we talk about 50% or 75%, that is QIB portion, so 50% divided into 60-40. 60% reserved for anchor investor, 40% reserved for other than anchor. Likewise, 75% here, 60% of 75% reserved for anchor investor QIB, and 40% of 75% will be available for that is our other than anchor. And 60% if we talk about, so that can be divided into two parts. One is 1/3, another is 2/3. 1/3 can be reserved for mutual fund category. 2/3 can be reserved for all types of anchor investor. If we talk about 40% category, very critical this one, 40% category. So then 5% can be reserved for mutual fund category. 95% can be reserved for all other than anchor investor. So these are my submission before you, what I've said to you, basis of allotment. Now then, instruction to be sent to the bank for successful allotment decision. In case of LICI, as you know, 949 was the cutoff price, which was decided by applying the Dutch auction method. What is Dutch auction method? It is nothing but that is our single price auction method. In the price, securities can be transferred, money will be debited from your bank account, money will be credited to escrow account, and then action can be initiated for credit of share in the client account with the DPs. Here, DPs can play the role, as you know, depository participants under the leadership of depositories. Then finally, almost we have done this particular portion, that is register. Supposed to send the bank-wise data of allottees and balance amount to be unblocked. Suppose you have kept in a bank account, there is 10 lakhs rupees, but actually number of securities issued to you, that way calculation was made, and then finally there is 9,50,000 suppose debited from your account, 50,000 amount left in your account. So 50,000 amount must be unblocked. Until unless amount is unblocked, since concept is ASBA, application supported by blocked amount, so naturally, until unless it is unblocked, you cannot use your own money. So the blocking and unblocking, two important parts of that. Then confirmation of demat credit from depositories as well. And then finally, this part is very important. 23, 24, and 25th, your steps are there. The issuer to make a listing application to stock exchange. As you know, you have seen step number 3. Step number 4. The stock exchange issues in principle approval. Suppose NSE issued in principle approval to LICI. Now step number 23. This is the right moment. And what is the right moment? The 16th May was the right moment to approach to stock exchange in NSE and BSE. Since you have given the in principle approval, so therefore my securities are supposed to be listed. And what happened? The securities listed and commencement of trading made. That means 17th May ultimately listed LIC at 872. There is a big point. The final price was decided in the primary market, which is called the cut-off price. There is 949, and at 949, investor, they basically got their share, but ultimately security listed at 872. There is a big question. Why? I come to the issue later. So keep in your mind, the price band of LICI was 902 rupees to 949 rupees. Final price at which securities were issued at 949, but securities listed on 17th May at 872. Those people are out of the market. Those people are teaching, those friends teaching this subject. You know very well what I'm saying. Now, then finally trading starts. The commencement of trading notice and then trading starts. That means 17th basically trading started in case of LIC 17th May, but before 1 or 2 days, they started the process according to the approval of the NSE and BSE. Now, if we talk about the public issue mechanism in India at present, primary market, there are 3 methods side by side. When we teach accounting subject, which is called the fixed price method, where application money, allotment money, first call, second call, final call, forfeiture, reissue, forfeiture, share, many things are there. Their premium, idea of securities premium, many things are there. But this method becoming obsolete day by day, because hardly 3-4 companies in India per annum, they are coming forward in the favor of this method. And another method we have, the pure auction method. This method also very new method, and this method where the main difference is that the fixed price method, book building method can be used by a new company or old company, listed, unlisted both. But pure auction method only can be used by listed company, not unlisted company. And under pure auction method, there is no scope of price band, only floor price. Suppose any company coming to market using the pure auction method for issuing share, there is floor price. Floor price suppose 400 rupees or 902 rupees. The cap price, that is sky is the limit, no cap price. But book building method, the concept is there is a lower price and upper price, what actually LICI has followed book building method. I skip some topic. If we talk about the price band, just look at a glance. Is it visualized, Professor Singh, the price band, this slide?
Yes, sir, visible, sir.
Okay, fine. So for the benefit of our participant, I'd like to show the concept of price band, already told you, but practically look at the matter. What is price band? Price band having, there is a two prices, as I told you, look at here. One floor price, which is called the lower price. Another is, that is a cap price, what is called the upper price. As I told you, always there is a gap between floor price and upper price will be maximum 20%, maybe below 20%. In case of LICI, the floor price was 902, upper price was 949. So gap between two, the below 20%. It is not according to anybody, it is according to SEBI. So according to SEBI, it is decided by the merchant banker. In case of LICI, that was done. Now, there is a question here, how floor price was decided? 902 was decided in case of LICI. Why it was not, that is, 900, why it was not, that is 1000, why it was not 500, why it was not 600, why 902? Question is that the merchant bankers, they play their role as BRLM. So merchant bankers basically, that is, will depend upon some qualitative and quantitative factors. I have shown here, practical approach. Some qualitative factors I have pointed out, and also we have a quantitative factors also. The quantitative factors, if I show you understand, the many ratios and many financial information on that basis, and also these are the qualitative factors. Say for example, Mukesh Ambani company and X company limited, obviously not same nature. It will matter. Why? Because Mukesh Ambani, the promoters, their market share, goodwill, and XYZ company limited's goodwill not same. So naturally it will matter. The LIC brand value, LIC position, market in India and across the globe, different other countries also LIC is performing. So naturally their decision, in case of taking the decision of floor price rupees 902 rupees, that was decided based on many qualitative and many quantitative factors. These are the quantitative factors. You see earning per share, diluted earning per share, maybe PE ratio, price earning ratio, maybe there is average return on net worth, many financial ratios. So that basis basically decided, our decision is taken by the merchant banker in case of deciding the floor price. But upper price, as I told you, that ultimately decided based on the applying the formula 120% of floor price. Now there is a point, how the final price decided. Say 949. So the formula is that a method is the Dutch auction method. As I told you, what is Dutch auction method? Dutch auction method, nothing but the single price auction method. If we take this case,
sir, you are not audible now, sir.
Am I right now? Am I right? All right. Hello.
Yes, sir. Yes, sir. You are quite okay, sir.
Okay.
Professor Brathendu is quite okay.
Okay. Thank you.
Quite okay, sir. Please go ahead. Yeah.
Okay. Now I'm showing the case let. Maybe there is some here Bengal weather condition today to some extent not proper. That's why maybe net issue sometimes there is happening. So I'm sorry for that. Okay. Thank you. Now here there is, I'm giving one case to understand how LICIs or any company's IPO or FPOs, their final price is decided practically. But it's not possible to take the information, the detailed information. I have taken one small part of information. Suppose if we talk about the LICI has decided to issue 100 share only, and then price band was suppose 450 to 540 rupees. You see that is 450 lower price and 540 that is upper price. And I presume that here, or rather you presume that the 5 investor A, B, C, D, E basically submitted their bid. That means bid price, at what price they would like to buy, how many shares they would buy. This particular table will show the actual picture. You see, they would like to buy, I mean, Mr. A would like to buy 15 share. At what price? Don't look at third column. Look at last column. First, second, and last column. Third column I come to you later. That is your Mr. A basically submitted a bid to buy 15 share at 500 price. B to buy 30 share 480 rupees. C to buy 25 share at 470 and so on. There is a point here. This is the rule framed by the SEBI. Their bid, the below, lower price and upper bidding process LICI. In the LIC bidding price band was 902 rupees to 949, isn't it? So therefore, here 450 to 540. So if you submit your bid at what price you would like to buy, you have to submit bid between 450 and 540. Your bid price is below 450 and above 540, then actually computer system such a way design, the application should not be accepted. You will not be able to submit your bid. Online application should not be accepted. Clear? So in that case, this is statutorily to be followed. You are supposed to submit your bid between the lower price and upper price, not less than lower price, not above upper price. Here you see the information I've given here, very small piece of information, but now there is a question, how the price was decided in case of LIC IPO. So with the help of this numerical case, you will be able to understand. You look at now third column, I have given cumulative number of share. The methodology is that the cumulative number of share column, level at which the total number of cumulative number of share either exceed or equal to the total number of share to be issued. You look at once again the how many number of share issued here? 100 share. But if you look at the column number 3, level D, you find the cumulative number of share exceeds, that is 105. But on your hand, how many shares are available? 100. So the main beauty of the Dutch auction method or single price auction method is that you can say that you have to stop counting up to D. So therefore here investor, bidders, E, will be called the disqualified bidder. It is followed traditionally. You cannot file any case against the company because this liberty has been given by the SEBI to the company and merchant banker to apply the Dutch auction method and to apply the formula. Formula is that a level D, since cumulative number of share actually exceeds, sometimes may be equal to your total number of share are required to be issued. Therefore, at this point, what is your bid price? 465. So 465 is the cutoff. But in case of LICI, what happened? Many people, they submitted their bid at 949, and that's why the cutoff price was the 949 under Dutch auction method. But here we find C did not give, but D also did not give. So naturally, here there is cutoff price is 465. So I would like to show this clarification. What I've said, kindly look at a glance. What I'm trying to say. What I've tried to say, please look at. Just give me just 30-second time for one urgency, please. Just 30-second time.
Sure, sir. Sure, sir. Dear friends, keep on giving some questions in Q&A box or chat box. Professor Saha will be taking up all those questions. It's an interesting topic, and we all are aware of IPOs, but what actually happens behind that we are not that much aware of. So try to have some questions, not only for LIC, for the other previous issues like Paytm or Reliance Power or some other Coal India. If you're having any query about this, you can put up in Q&A box or chat box.
Yes, I'm sorry. Actually, today our university examination will be held coming days. So today many issues are there. So after this deliberation, I'll go to university. So our honorable registrar actually asked me something. I'm extremely sorry for that. Okay, thank you.
Okay, sir. Continue.
Okay. Now let us see the chat box. Anything we have audible, participant. Okay. Thank you. Now then I'm continuing. So I think so far I have told here That is, I think, I don't know whether participant is understanding or not. Okay. And now then I'm showing the how LIC IPOs basically manage. So I'm showing one exhibit. I think Professor Singh, this exhibit, it is visualized now
Yes,
properly?
sir. Yes. Yes,
Okay,
sir.
okay.
Visible.
You see, this is the modular book building process, which was also used by LICI. Not only LICI, it may be public sector unit or maybe joint stock company, any company coming to market, they follow the SEBI regulation. Though LICI is not supposed to follow the SEBI regulation, but they basically follow the SEBI regulation like TCS or Tata Motors or maybe L&T or maybe other companies also. But this is basically a holistic view. So far, I have told you at a glance. Okay. So here you see the regulatory bodies, SEBI, ROC, and stock exchanges are there. Issuing company, LICI, you presume, and LICI basically appoints the book running lead manager. What they in our LICI, many merchant bankers appointed. Suppose SBI, Capital Market Limited, ICICI Securities, and others. 8 to 10 companies, JP Morgan also, and merchant bankers after getting appointment, they appointed other intermediaries. What they the register to the issue, they maintain the books of accounts. We have very much idea about the registered in the university system. They can carry order, cannot give order. Here also register can carry order of the company and merchant banker to the issue. The escrow account can be opened by the company with different commercial bank. One or two banks can be hired. Syndicate members, they basically play their role for campaign program. Say, for example, we know in a political campaign program, they conduct the road show. I think all my friends, they know very well what I'm trying to mean here, the road show concept. This road show also use our primary capital market, IPO market also. The road show means at present there is online campaign of your issuing securities. So this road show basically organized by syndicate members. Jokes apart, but seriously, I'm telling you, say for example, in case of political party meeting, in case of road show, the Bollywood or Tollywood, I mean, in case of Bengal Tollywood, they are Bollywood, or maybe other artists hired by the political party's leader. And why? To capture the mass. Here also, the road show in case of our primary capital market, the company hire different syndicate members like other merchant bankers, stockbrokers, mutual fund companies. They take initiative. They help the company to make the road show, or rather to make the campaign program, so that the issue process gets success. This is the objective of road show in case of our case, not political parties case. So therefore, here finally, that is to whom you will approach. Three types of investor. One is RII, NII, and QIBs. Now I skip all those and then coming to the LICI part. Okay, I skip all those. Different methods are there. Allotment process is there. You see, as I told you, allotment process 10%, 15%, 75%. There are variation. One exhibit I have showed, as I verbally I told you, but due to time constraint, I am not showing that. Many cases I have, but 35% is to 50% is to 50%. So many things are there, but no, I'm coming to straight away our LICI portion. These are all cases I have. Then we have French auction method. Also French auction method, as I told you, this method used by the listed company, not unlisted company. So it's a multi-price auction method. Here also I have a case, but 90 minutes, basically it is not possible to cover all those. So our objective is different. Naturally, I'm coming to the other part of my discussion immediately. That is, public issue management of LICI IPO. Okay. So here, draft red herring prospectus snapshot. As I told you, that any company coming to primary market, they are supposed to, ultimately, they are supposed to prepare the draft red herring prospectus, followed by red herring. Then after that, finally prospectus. And these will be done by the merchant banker. What is that? It's a 400, 500 pages, which includes the objective of the public issue or IPO, a methodology, how many number of shares can be issued, what the promoters, hierarchy of the management, track record, last 3 years track record, snapshot of financial information, price band, what the merchant banker, registered, other intermediaries appointed, and why the money will be raised, how it can be utilized. As you know, under disinvestment program, LIC's IPOs money never be used by the LICI. We clearly mentioned in the red herring prospectus and prospectus, because it is the government policy, disciplinary policies, that any amount of money received by the LICI by issuing securities about 4% of their total stake, ultimately that can be given to the government. And that is why the LICI IPOs came into market as per the decision in the parliament and decision of the government of India, His Excellency President of India. I've tried to show one snapshot information. What is the type of issue? It is an offer for sale. And how many number of offer actually made? Here I've given you 316,249,885 equity share. You see some information given missing. Dot million. Dot million means when you prepare the draft trading prospectus, my dear friend, that time, that is, you don't know what is the actual price. So that is why at the time of preparing the prospectus, then you can put that is how much amount the offer size in terms of rupees. So you know how many share can be issued in case of LICI, but you don't know at this stage how much amount can be had from the investor. So that can be decided after deciding the Dutch auction method. Okay, so this is the thing. As also I told you, the here promoter name is, that is our His Excellency President of India. Now I am coming to the some draft trading prospectus snapshot. If you carefully look at this information, I don't know whether you can visualize or not. I can at least visualize. Here I told you information given here. Yeah, it is the IPO up to the amount, as I told you, number of share I told you 316,249,885 equity share. Face value of this was 10 rupees each, and price band was, that is 902 rupees to 949. But ultimate price we can see in the prospectus. Wait for that. And many informations are there. What will be in a risk factor and other things also here normally mentioned in the red herring prospectus, the first or second page. And there are many issues are there. Risk in relation to the first offer, general risk, maybe that is disclaimer part, maybe any litigation issue, and listing part. As I told you, the very beginning, the LIC approached to BSC and LIC, I mean BSC and NSC, for the purpose of listing, for having the in principle approval. And LIC, I did it. That information I have mentioned here at the end, listing. Now there is a question. Who are the merchant banker or book running lead manager? So please look at carefully. The Kotak Investment Banking, Axis Capital, BofA Securities, the City Global Market, Goldman Sachs. These are all merchant banker or investment banker. ICICI Securities, JM Financial, JP Morgan, and others, even SBI Capital Market Limited. Who was the registered to the issue? The registered to the issue was the KF Intake. KF Intake was the registered to the issue. And bid offer here, open and close date, that was not given in red herring prospectus, draft red herring prospectus, but that was given in red herring prospectus and prospectus, because it was the draft nature. Normally it is submitted to the SEBI for their suggestion. SEBI official, they scrutinize the information and they give their suggestion. Coming to prospectus likewise, at the end basically it is prepared. Prospectus prepared 12th May 2022, and draft prospectus prepared when? Please look at, date is not mentioned here, unfortunately. I don't have information. Okay, and then it's 100% book. I want to see whether participant really attending my class or not. You write in chat box. Don't mind, you're my colleague. How much amount your offer size? Please write in chat box quickly. I want to see whether you visualize the screen properly and listen to Professor Saha's lecture or not. Kindly write in chat box the LICL, how much amount was the offer size in terms of rupees. Please note down, I want to check. Okay, I'm continuing. I wait for from your side. No, 902, it is not offer size. 902 to actually, right, it is a lower price, but you have written here that is written here, I think someone, that is, 21,000 crore. Yes, you are very nice. You have written it nicely, because about 21,000 crore. Thank you, sir. Thank you very much. Thank you very much. Yes, another also, Professor Panduranga also written 2 to 1 crore. Thank you very much. I'm extremely happy. I know that is, you are very much serious. You are all teachers. I am also teacher. Thank you very much. Okay, coming to the next part. You see here, already told you offer price was 949, and the promoter names President of India. A discount of 45 rupees per equity share was offered to whom? RII. Normally, as per Companies Act 2013, share never be issued at discounted price, isn't it? But this type of company, not joint stock company, public sector unit, where they basically decided in their board meeting, we would like to give share to our individual shareholder, I mean bidders, at discounted price, not 949, 949 minus 45. So at this price. Likewise, they also given discounted offer 60 rupees per equity share, 60 rupees per equity share offered to the eligible policyholder, and eligible employees also, they given the discounted price per share at 45 rupees. Okay. So this was the beauty of this particular issue, LICI. Okay. This is one important part I'd like to share with you. And then we have many issues. Yeah, bid offer period, bidding period, I told you, it will be minimum 3 days, maximum 7, most maximum 10 days. I request the participant to interact with you virtually. How many days was the bidding period? Could you tell me, after seeing this information, how many days was the bidding period? Please write in chat box. I want to see whether really you're understanding the issue or not. Here I have given you the all information. Bidding open and bidding close. So ultimately, how many days? It is 3 days, 4 days, 5 days, 7 days, 8 days, 10 days. How many days? Okay, you are checking and you will write, I think. Okay. Someone written 6, but you carefully look at, I think it is actually the Monday, 2nd May it was open. Wednesday, 4th May, it was closed. I'm sorry, bid offer opened on 4th May, okay, and closed 9th May. 4, 5, 6, 8, 9. 4, 5, 6, 8, 9. It's a 5 days, not 7 days. It's a 5 days. But for anchor investor only 1 day, 2nd May. I repeat, for May to 9th May, that means 4th, 5th, 6th, 7th, 8th, 9th. I'm sorry, 4, 5, 6, 7, 8, 9, 6 days. It is correct. 6 days. Dr. Singh and also Dr. Singh, also Dr. Monji Saha. Monji Saha from which university or which college? Please, in writing chat box. In the meantime, I'll see. Dr. Monji Saha, and Dr. Singh rightly pointed out that is 6 days. But for anchor investor, 1 day. Oh, Kalna College, Bengal. Very good. Okay, thank you. Coming to the next topic, next portion. One of the beauty of the prospectus is that if you look at carefully, red herring prospectus do not have the total amount, but here we have the total amount. I skip all those. These are all common, everything. Now then I'm coming to the price band. The offer price was, that is, offer period, already I told you that, already no repetition. Who are the lead manager, I told you. Pricing date on which and then the got the opportunity for discounted price. As I told you, the retail investor, employees, and policy holder. Cut-off price was 949. As I told you, though 949 cut-off, but all these three categories, they got securities at discounted price. Okay, that the opportunist type. And already I have mentioned, employee reservation portion is important. Yes, always there is employees. They can get some benefit in terms of number of securities because they are the special category. So here also given to motivate them. Then pricing date already told you, decided 12th May. All those I told you. A total offered for share before you look at a glance. Face value 10 rupees. And this is the snapshot information at a glance. Already I have shown designated stock exchange when it was listed. Yes, that is the point. Finalization on the basis of allotment with the designated stock exchange. 12th May. Initiation of refund for anchor investor. 13th May. And securities allotted and credited to demat account. That is on or about 16th May. And most important part is that 17th May, the commencement of trading of equity shares started with NSE and BSE, 17th May. Okay, and then this is the most important, our slide. Just a minute. Yeah. Officer Singh?
Yes, sir. Visible, sir.
Okay. Now, my dear friend, please look at this slide very carefully. I have tried to give you the holistic view right from the date of first day of listing to 6th June, yesterday. What was happened? Whether price was going up or going down. Please look at very carefully some piece of information. 17th May, the cutoff price was 949 and listed price was 872. There is a question here. Why LIC, this type of branded company and very blue chip company whose listed price was 872, though the cutoff price at which securities issued at 949. You may say because of market performance. I agree. Because of global market situation and maybe war between, that is our Ukraine and Russia. This is one point. But another important point is that the first day supply, if you say the demand was less than supply, because listed price basically decided based on many factors. One factor is demand and supply on a particular day, first day. Maybe the domestic market situation, maybe that is your international market situation, maybe the unprecedented event, the government any announcement. So many situations, many factors considered. So LICI, their official, they decided that if listed price, they could decide the 949. In that case, you have the capital depreciation March. Why? Because you see, on this particular day, 17 May, the closing price was 875. So suppose, if they decided the listed price 949, then ultimately, there was a chance for capital depreciation. That means 949 minus 875.25. So since they decided 872 listed price on first day, unfortunately closing price was 875. So you can say about 3 rupees, 3.25 rupees was the capital appreciation per share. But now there is a point. Now there is a point. Now there is no questions coming from our participant point anyway. Then if you see 18, what happened? Price was going up as compared to 872, the listed price 876. But you see what happened on 19 May. 19 May it was 840.85 rupees. Then next day 826.15, then 816.85, and so on. Then ultimately again if you see on that 30th May, suddenly price was going up 837.75. It's because of market situation. But I say something about that. Wait for that. What did merchant banker do that time? Why they have decided the price is 902 to 949? Why? High price. Now then coming to subsequent days, and most recently, yesterday, 6th June, the price was closed at 777.35. Can you imagine? Suppose you have bought 10,000 share. So here by paying 949 rupees, so 10,000 into 949 rupees, and now if you want to sell 10,000 into 777.35, it's a loss. So therefore, at present, that is, you must get frustrated. I thought that if I invest money in LICI, then I can gain. But my suggestion is that don't worry. At present, market situation is not proper. But I'm not, that is, giving assurance. I'm not, but I'm a student in finance, and what I know that here what is happening. So it is not long-term matter. It is a short-term nature. So therefore, it will be recovered subsequently. Why it can be recovered subsequently? Because at present market situation is not good. Suppose if you take an example, in the year 2020, March, April, May, June, because of pandemic, the market price drastically came down. But you see, in the month of October, November onwards, in the year 2020 and first quarter of 2021, or maybe in the second, third quarter of 2021, the price was going up. Different companies share drastically, and stock, BSE Sensex reached at about 61,000, if I'm not wrong. So therefore, but there is a point here. Why my point is that here 949 was the cutoff. Why? That is merchant banker decided at high price. It's a game. Why it is a game? Question, you ask your answer. Unofficially, I tell you, ultimately the government objective was to collect the money, huge amount for the purpose of society's development. So if the merchant banker decide the price at 600 or 700 or 500, so ultimately the government could not have the money, the appropriate amount from the investor. So therefore, it was the nice decision, no doubt about that. And performance-wise, previous performance-wise, LICI's price, it is a handsome price. So government, now we have to wait for the coming 6 months, coming 1 year, what is happening in the stock market. So this is my submission before you. I think I have been able to communicate you the sufficiently. That is actually the even in the last day, yesterday, what happened, 6th June, what happened, that is a price 777.35. Now, now then I come to you, last part of my discussion, that is investor awareness. So far I have discussed. I just keep some slides. Professor Singh, my deliberation key, reachable to our audience properly, or it is a wastage of time?
No, it is going, sir.
No, I'm telling you, is it all right to participate, or is it a wastage of time? I don't know.
No. So IPO is a very interesting area, sir. Being faculty members of Commerce Economics Management, we need to understand.
Okay. Thank you, sir. Thank you. So here you see the, what I'm saying. Just a minute. I'm sorry. Just give me some time. I immediately come to you. Yeah. Now, if we talk about investor awareness in primary market, SEBI suggests that there's some do's and some don'ts. I have already shown you see some do's because we are very much qualified. We are very much qualified means professor, doctor, engineer, CS course, good professor, but we may not have some kind of financial literacy. Some people having financial literacy, some people may not have. If you have financial literacy, you know everything. If we don't have, so then we have to learn, we have to follow something. So SEBI suggests that some do's and don'ts. I have given here many. Few of them I tried to say. I have tried to cover here also few of them. Take a holistic view of your financial goal and invest accordingly. This is one thing. Be aware that value of your investment is subject to ups and downs of the market that do not offer guaranteed returns like bank deposit. So if you come to your market, so you have to see, you may have capital appreciation, capital depreciation, you have to accept. Then you have to read the offer document. What is offer document? It is red herring prospectus or prospectus. So you have to read carefully. If you are unable to understand, then you talk to your portfolio manager or advisor. They can guide you to read it and they can guide you what to do, what not to do. Risk factor pertaining to the issue, which is very much part of red herring prospectus. Financials of the issuer. Issuer financial position, track record, audited track record are part of the document. What is the object of the issue? That also given, as I told you. Any litigation case associated with a particular company, suppose LIC. IPO grading concept is very popular. I have not discussed here today. In different deliveries across the country, I speak on the IPO grading or credit rating also. So in case of new IPO, the earlier it was mandatory in nature, at present it is not mandatory, voluntary nature. The basis of issue price, as I told you already, the qualitative and quantitative factors that you can go through in case of taking a decision. Business overview, the particular company, about the company overview you can go through, and then ultimately you can have the background of the promoters, background of the company, and instruction before making application also there. And also you must be aware of the offer document which are available in the SEBI website, as I told you. SEBI website, issuer website, or stock exchange website. If you visit the SEBI site, important document where that is, all those companies, red herring prospectus and prospectus are very much available. Anybody can download in the public domain and you can go through if you have a financial literacy. Otherwise, you can depend upon the advisor also, financial advisor. The physical copy of the offer document may be obtained from the SEBI, as I told you, merchant banker also, and then average offer document. Average means small size, 400, 500 pages, and another maybe 100 pages, snapshot of the offer document, red herring prospectus there. Maybe that is your, be aware that any intermediary or staff making a recommendation is required to disclose their interest and position in that issue. ASBA method, as I told you, detail, application support a blocked amount. You cannot give money, but you can give actually your banking information. So that all those should be given there, you have to go through. Applications should be filled in block letter in English. Pursue the status of the book on the stock exchange website. And that means you submit your bid accordingly. In case of any grievance or doubt, contact the compliance officer or merchant banker named in the offer document, red herring prospectus, to whom actually you approach. The redressal cell is there in the SEBI. So therefore, you can do that. You can make your complaint. Be aware that listed company email ID. So everything is there in the red herring prospectus. Be aware that investor complaints against the listed company displayed on the website of the stock exchange and SEBI as well. You can approach to SEBI if your grievance is not resolved. If you visit the SEBI site, my dear friend, as you know, the SEBI is supposed to collect the grievances from the prospective investor or existing investor, and they try to resolve the grievances methodically. It is very much available in the SEBI site in different menu. It is available. Pursue the post-issue advertisement issued by the company for issue price and basis of allotment right. At the time of issue, just a minute, I check the chat, wait for that. At the time of issue beginning, the advertisement is made in the newspaper. At the end of the issue, it is also very much required advertisement to give the final view of the issue process. Now in chat box, if I see, okay, suggestion, yes, Professor Singh told to the audience, fine. More or less we have done. That is, I'm coming to you another 10 minutes, then we'll conclude here. Don'ts, we have some don'ts. Do not invest with borrowed money. It's a common rule. Do not expect unrealistic and guaranteed return. Do not invest without reading the red herring prospectus or offer document. Don't be influenced by advertisement or advices or rumors or unethical news promising unrealistic gain and windfall profits in mass media. Don't be guided by astrological prediction on share price, rumors or hot tips or opportunity knocks. Only once kind of advice. This type of things can be avoided. Don't be swayed by market sentiment. Don't invest on any explicit or implicit promises made by anyone. Don't indulge in impulse investing. Don't participate in unauthorized and illegal trades outside the stock exchange mechanism. And many things also we have. Do not look at, as I pointed out. One is that do not mutilate the application form, which is very, very important. Okay. That's all. And then I conclude here. Many things are there. I show the few slides. That is important part. In a primary market, is a number of issues. Some old data we have 2001 to 2006. We have some data 2001 to 2016 again. This data you see public issue and right issue data. This data also 2001 to 2016, some listed IPO and equities part and other bonds, etc. Then I conclude here officially, that is, most of the merchant banker data. One information I saw 2000 to 2006 merchant banker performance. We have seen bankers performance also, underwriters performance, credit rating agencies. In terms of number, all in terms of number. Registered to an issue in India, depository same. Why same? 2 depositories in India, NSDL, CDSL. That's why 2. And if you say registered 250, you say CRA 7, you say underwriter 60, you say banker 70, merchant banker 250, maximum 250. I'm telling you. And then finally, that is, thanks for your patient hearing. And I request Professor C and also Professor Jyoti Kumar, here there is, if you students having any suggestion, any further query, anything, I'll be happy and give your advice as well. Thank you very much.
Sir, unmute. Mr. Jyoti Kumar, sir, unmute.
Thank you so much, sir. Thank you so much. Very informative, and I understand as the author of many textbooks, you wanted to give a lot of information, and normally we take so many classes to cover this much syllabus, in fact. So thank you so much. And Professor Singh may ask some, Professor Bhartendu Singh, he may take up the question and answer session. Before that, from my side, I want to ask two questions.
Yeah.
One is subject related, that is it justifiable to make LIC go to public? Is it not like killing the goose that lays the golden eggs? I mean, that is one question. And another question is from academic side. You are the head of the department of a very large department, and I came to know that your department is having 1900 students.
Right.
Am I right, sir?
Right, sir.
1900 students, one department. It is like a mini university, in fact, your department itself. and how would you manage, your life, your work-life balance strategy? Because as IPOs director and as head of the department, and you are also very voracious writer, and how you are managing a work-life balance. So these two questions from my side.
The two very pertinent queries. Let me allow Professor Jyoti Kumar to answer the second question first, coming to answer the first question later. Second question here, that is, we have total at present 19 full-time faculty members. Some faculty members are to be appointed, but we have a many guest faculty. We have a roughly that is 35 guest faculty. I mean part-time faculties, visiting faculties, and we have there is many research scholars. 200 research scholars. So we maintain our system such a way that with the help of junior teacher, we have in the department assistant professor, roughly 8 to 9 assistant professor and associate professor, and other there is 8 to 9 there is professors. So our assistant professor, they help us a lot, because jokes apart, logically they did not get the promotion associate or professor. Naturally they know that to get the assignment, promotion, that is we have to serve the department proper way. And at the same time, the PhD scholars, they are suggested to help the department as well. And ultimately, that is with the help of them. And then we did it. And the second thing is that, our students also, they are very serious and sincere as well. So basically, we feel difficulties at the time of conducting the not class, but in conducting the examination process. So in the class, basically class are allotted among the students. Not only MCOM, we have a MBA also. MBA, we have a 60 students also. MBA Financial Management. This is also the part of MCOM Commerce Department. I'm also head of the department of this, but we have another dedicated coordinator to coordinate the MBA. But under the department of MCOM, there is your MBA center. We have a Center of Excellence Financial Market. Their PG diploma course. There also we have a Intech 75 and Commerce and PhD program. MPhil is already abolished. So your address to your answer to the second question, conclude that it is very typical and difficult job to run the system that is 1900 to 2000 students, but somehow we are managing with the help of the scholars and few limited staffs, manpower very limited at the university. New appointment is not done properly, to be done later. So somehow we are managing, but it is under pressure. You can, but I am trying, God's sake, that I'm trying to, trying to feel that I must be the administrator, but first I must be the teacher first. So if I must not be the teacher or may not put something as author, then our object will be lost and I get frustrated sometimes. That's why I try to maintain that is administrative work. At the same time, another part of the work, especially Saturday, Sunday, I focus on my research, own research, major research project, ICSSR, I did it, and also there is, UGC major research project, I did it. So that way, so Saturday, Sunday, I manage that way. This is the way by which I try to, manage the situation. And answer to question number 1, you have rightly pointed out, it has been the fashion of the central government, not only that is current government, is a right from that is Manmohan Singh government to this government under the decentralization policy. Many PSU like ONGC to sell well, and also that is your LIC to IRCTC. That is, it became the fashion to issue some kind of shares in the public in the form of IPO offer for sale. Objective was to collect the huge amount of money, and that money could be used not for this particular company, as I mentioned in my deliberation. The money can be used by the government for the purpose of social welfare of the society. And now there is a question, why it is appropriate? I must say, according to you, it is not appropriate, but since you have a deficit budget, so to make up the deficit budget, ultimately government, any government doesn't have any color, government has become, government is forcefully, government has been compelled to collect the money, to arrange money, to run the system. They have various sources of revenue like, direct tax, indirect tax, etc., everything. But this is one huge amount of money what they get, and that will make up to some extent the deficit budget. Okay. And if you see the Honorable Finance Minister Nirmala Sitharaman deliberation in the last budget, so she categorically mentioned in the budget why LIC IPOs will come to market. The reason behind that, ultimately we have a deficit budget to make up the deficit budget, and ultimately we really need money for the purpose of conducting the social welfare of the people. So this is my observation.
Wonderful, sir. Wonderful. What I liked, that sentence I liked very much. I'm a teacher first. Yes, Yeah. So that is one, and there is a wonderful message, not only for senior teachers like me, even for very young teachers who are there. Many young teachers are there from the colleges and the universities. They should learn some lesson, from your real life example. Wonderful, sir.
Thank you, sir. Thank you.
And I request Professor Bhartendu Singh to take 2 minutes and to conclude.
Thank you, sir. This was a really very interesting session, sir. Many good things I learned. How this price is discovered, how price discovery is done. But sometimes I feel, sir, if I remember my days of studies when I was studying corporate account, my favorite topic was issue of shares, forfeiture of share, allotment, and all those things. And with this ASPA system, ASBA system, now that concept is gone. Now everything is allotted against blocked amounts. So there is no issue kind of things. But in last 20 years, ASBA system started. I think this book building system started sometime in 2000. Still we are teaching these concepts, issue of share and all those things, which is practically not happening anywhere. So what is your view on this, sir? Should we discontinue?
Sivaram Prasad ji, please keep in mute. Sivaram Prasad ji, please keep in mute.
Yes.
Mute le bettandi, mute le bettandi. Okay.
Sir, thanks.
Yeah.
Sir, Saha sir, I was asking that now since last 15 years we are teaching
Professor Singh, if you allow me,
yes,
you have pinpointed very delicate issue, because across the country, even you see a study material also, even chartered study material also. Why I am referring CA material? Because we feel that the chartered accountants, they always try to implement the new things, but unfortunately, the final, while we have incorporated most innovative tools and technique like book building mechanism, ASBA method, and there you see that Dutch auction, French auction method in financial system, financial market, but nobody has taken initiative properly. That is, to incorporate in our financial corporate accounting under the chapter issue of share. There is an old method, fixed price method, application money, allotment money, first call, second call, all that. It's a very pathetic. And at least in my university, that is, this topic is not taught in. I repeatedly told last few years that because they are very secky and they doubt if I do something new, then that will create some problem. Even I told them, Dekho bhaiya, what is happening? You are making so many journal entries under the old method, but new method, only one journal entry. Because in case of application, allotment, first call, final call, reissue, forfeiture, many journal entries we make in accounting. But if what Professor Singh, you are rightly pointing out, if we apply the book building mechanism, one journal entry will be due journal entry, and another journal entry will be bank account debit to equity share capital to securities premium. That's all. One due journal entry followed by this journal entry, isn't it? So therefore, and another thing is that in case of new method, there is a less chance of money refunded, because that method money could be refunded, interest on call scenario concept, interest on advance money, many things are there. But here very smart method, but there is a high time. Before the faculty member, those who are participating in our today's program, what Professor Singh rightly pointed out that raised the issue, in our university or college, we have to take initiative at the time of revising the syllabus, where that is our accounting syllabus, corporate accounting. I think that is this issue to be incorporated along with that is our old method, because old method has not been abolished, as I told you. But SEBI is not giving any importance on this method. Therefore, this method may be there, but at the same time, the new method, sums and everything are supposed to be incorporated. So thank you, Professor Singh, please.
Sir, one more thing. What is your view? Is it possible, price rigging is possible in this IPO system, under book building system? If I start, just suppose 100 shares I have applied on higher price rank, then if I apply many shares for the lowest price.
Now Now, price
then the subscription will be oversubscribed. So more demand it will show, but actually I'm willing that it is little higher than fixed on little higher price, so I will sell and get some profit. So this kind of rigging is possible, sir.
Yeah, your point is very good, and that can be that might be possible, because there is a high chance for making a nexus between the merchant bankers and also the market investor to create the subscription. Okay, there is a high chance, and you have pointed out rightly why. You see, the LIC IPOs primary market was very much oversubscribed.
Yes.
Whereas when coming to stock market, that is within one day, you see the listed at 972. Why? That is a big question before everybody's mind, your mind, my mind, and every people's mind. So if it is really overpriced, so in that case, why that is our price was listed price was decided at a lower price 972? Why not at the upper price 970, 949, or maybe 1000? So there is a big question here. In that case, ultimately, this overprice was, what subscription was made. Ultimately there is an artificially there's some nexus between there is a question between merchant bankers and the market people. So many things coming. Another thing is that here merchant bankers seem to solely responsible, because I tell you, for your kind information, my PhD topic was in the year 2004-5. Actually concluded my PhD. My PhD topic was the role of merchant banker or investment banker on primary capital market with regard to the economy as well. So that time I raised the issue that merchant banker is solely responsible in case of deciding the floor price and a cap price finally, and deciding the final price. So, but merchant banker responsible, but officially nobody can charge against the merchant banker. If I am not getting well, so you are supposed to compensate me. So therefore, this is the thing, just like auditor. So until unless you prove that auditor is culprit, so you cannot get the compensation. Here also, very typical and difficult case, you will not be able to say the merchant banker to have the compensation. Professor Singh, please.
Thank you, sir. Our next speaker, Professor Shivram Prasad, has already joined, so I will hand over the session to Professor Jyoti Kumar to take further.
Okay, so thank you very much. Once again, I'm grateful. I'm grateful to Professor Jyoti and Professor Singh and all the faculty members. Thank you very much. Let me allow to leave. And we have a nice meeting today, and have a good relation with all the professors, particularly two professors I mentioned, Professor Jyoti Kumar and Professor Singh. Thank you once again for giving me this opportunity. Thank you very much.
Thank you so much, sir. We must be grateful to you. We will continue our relationship, sir.
Thank you. I must mention. Thank you very much. Okay, Namaskar. I'm leaving immediately.
Yes, sir.
Thank you.
So without taking much time, Professor Shivram Prasad Garu is online. Yes, I welcome Professor Shivram Prasad Garu. He is my good friend from my days when I worked in Andhra Pradesh, and he used to be a research scholar there at that time. Maybe in 1990s, he was a research scholar, late 1990s.